To me, it's an effective wink, wink, nod, nod. We're going to start a Bitcoin strategic reserve and we're not going to tariff gold. Everything else, you're not allowed to buy. I'm going to impose a 30% withholding tax on stocks and land and real estate you buy in America. And the 10-year treasury is going to run real rates negative. So you buy the treasury, you lose purchasing power. You buy any of the stuff in this country, I'm going to tax the living hell out of you. But you can buy gold, and I encourage you to buy Bitcoin. Let's just store our capital in something that is scarce and see where things unfold from here. I think that that'll be the winners of this decade. Is
Jack Mallers highlights the current economic environment as a critical turning point. He points out that capital markets, especially U.S. tech stocks, are bloated and irrational, with companies like Google trading at 50 times earnings. Despite this overvaluation, foreign capital from trade surplus countries continues to flow into the Nasdaq. This trend persists because, in the absence of a gold standard or hard collateral, the U.S. stock market has historically functioned as the de facto backing for the U.S. dollar. Subscribe now before Google hits 100x earnings.
I think this is a fascinating time to give the capital markets access to Bitcoin. Through the ways that we are at 21, which is the stock market is highly inflated because it's taking all of the trade surplus with foreign partners. And this is the dollar instrument that's been de facto backing the dollar for decades now, is just plow it into the Nasdaq. Who cares about the price? Sure, Google's worth 50 times earnings. That's such irrational behavior. That's ridiculous. And so now I think that's all unfolding. And capital has to find a new home. I think it's going to find it into Bitcoin eventually. Gold for now, for certain, if you just pull up a chart. But just giving these capital markets access to rotate out of highly inflated tech stocks and highly inflated basket of indexes and into a business that's acquiring a hard money that has a tremendously powerful balance sheet that's able to give you fixed income instruments like a Bitcoin-backed bond. We think there's huge opportunity there, and there's a massive, massive amount of capital that needs to rotate out of, a carry trade that's over and that's unwinding. And this is a process that's been building up for 100 years since the World Wars. Is what's de facto backing this printed piece of paper that the U.S. is exporting, and these deficits that have compounded on each other for so long, and giving people an escape hatch. To me, it's an effective wink, wink, nod, nod. We're going to start a Bitcoin strategic reserve, and we're not going to tariff gold. Everything else, you're not allowed to buy. I'm going to impose a 30% withholding tax on stocks and land and real estate you buy in America, and the 10-year treasury is going to run real rates negative. So you buy the treasury, you lose purchasing power. You buy any of the stuff in this country, I'm going to tax the living hell out of you. But you can buy gold, and I encourage you to buy Bitcoin. And then to see like the Abu Dhabi Sovereign Wealth Fund come out and say, yeah, we just added $500 million to our Bitcoin position. I think we're moving back to neutral reserve currency. I think eventually the Trump administration is going to revalue the gold on the balance sheet of the government, and they're going to put more of a focus on Bitcoin. And the dollar, the dollar will be the world reserve currency, whatever that means. Yes, your pizza will be priced in dollars, but the world reserve asset where sovereigns and central banks and businesses actually store their cash balances, I think will be increasingly gold and Bitcoin, and eventually Bitcoin. I see a lot more gradual process towards gold and Bitcoin than I've ever seen of any administration. And they're trying to mask it. Like, even QE is a bad word now. Even the normal American at the grocery store knows QE means inflation. Inflation is bad. And so, Bessent is finding ways to stimulate dollar liquidity through treasury buybacks instead of using words like QE. So at the end of the day, it's all garbage. They're saying the same thing. They're going to have to do the same thing. They're going to have to increase the money supply. They're going to have to print capital. They're going to have to devalue the dollar. And they're just doing it in clever ways that the person at the grocery store doesn't recognize. But I did find it fascinating. The one thing Trump didn't tariff was gold. And amidst all this reordering of global capital flows, he made a particular point to say, we have a Bitcoin strategic reserve. Now, whether that was purposeful or not, but foreigners and sovereign wealth funds like in Abu Dhabi, they're clearly taking note. They're buying gold, they're buying Bitcoin. They're not buying, I think the NASDAQ and Bitcoin will decouple because sovereign wealth funds are going to stop buying Google at 50 times earnings. Why would they anymore? They're going to get a 30% withholding tax. Trump's told them to leave. The funniest thing about these people is financial authorities tell you what to expect because they cannot surprise the financial market. The financial market has way too much leverage. Leverage and volatility don't go well. So one of the ways they reduce volatility is by telling you what's going to happen. That's when Jerome Powell comes out at his little meetings and says, I'm going to stop QT and start QE. Do you hear me? And the financial markets start pricing in what he's saying because they can't afford volatility. There's too much leverage in the system. And so what Bessent has said is, my goal is to reduce the deficit. It's not to erase it. And so you just listen to the guy. They're still going to print money. They're still going to have to finance this government through borrowing from whatever highly levered US bank deposits and hedge funds in the Cayman Islands. So I agree with you. It's saying that we're going to balance the budget, but also print money. These are contradictory statements. It don't make any sense. We'll see what happens, but just the notion that they're telling foreign capital to get out of the country, we're okay with you buying gold and Bitcoin, but not anything else. I think there's hopefully, I mean, and I'm biased, right? I'm a Bitcoiner, so I'm optimistic here, but I'm hopeful that there's a restoration back to, let's just store our capital in something that is scarce and see where things unfold from here. I think that that'll be the winners of this decade is I'm going to sit this one out. I'm not going to own bonds. I'm not going to pay 50 times earnings for a tech company where I don't even understand their products. I'm just going to stack sats and watch this unfold. And those are going to be the biggest winners, both at the sovereign level and the individual level, in my opinion.
Jack Mallers highlights the current economic environment as a critical turning point. He points out that capital markets, especially U.S. tech stocks, are bloated and irrational, with companies like Google trading at 50 times earnings. Despite this overvaluation, foreign capital from trade surplus countries continues to flow into the Nasdaq. This trend persists because, in the absence of a gold standard or hard collateral, the U.S. stock market has historically functioned as the de facto backing for the U.S. dollar. Subscribe now before Google hits 100x earnings.
I've always thought of Bitcoin as universal acid. Anything it touches, it conquers. You can't stop it. And so for the people that always say, why are you so focused on the price? Why aren't you focused on the technology? It's like, well, the price is the most important KPI we have, and it's our biggest marketing tool. And the fact that the price of both Bitcoin meme stocks and the price of the spot physical asset just continues to go up and conquer everything it touches, that is the best way to spread the message. To be clear, there is no silver bullet podcaster. At the end of the day, people are going to be attracted to giant green candles because that's what we all want in life is, financial stability and in a way to afford the life that we think is reasonable. So that's for one. For two, yeah, I think I agree with you. I think in the US, there's a very unique story unfolding that I'm fascinated by. And one of the reasons we felt we should really go out and be the change we wanted to see in Found 21 is just what's happening in the United States. For the listeners, the way I think about it is we're unwinding from the world wars. Call it after World War II, a lot of the monetary regime setup and arrangements was very simple, is that the US was strong. They, if you could claim a winner of the world wars, it was, in my opinion, everyone lost. But if you could say that someone won, it was the United States. They had the most gold at the time, the strongest economy at the time, the strongest manufacturing base at the time. And their claim was they were going to export their strength to help everyone else out, get back on their feet through the dollar by taking on the role of the world reserve currency. And so the arrangement was very simple through all of these Bretton Woods agreements and such is we're going to export the dollar and import goods and services from you guys. So you guys get to use our strength of our economy and the fact that our consumers are consuming so much by giving us food, raw materials. Russia's the greatest natural resource producer in the world. China's now the world's factory and manufacturing base. Germany makes really cool cars. Japan saw some of the biggest domestic growth of all time. And you're going to export to American consumers. We're going to export the dollar. So at the time, the dollar was backed by gold. Then all of a sudden you sever the relationship with gold and the dollar is backed by kind of oil at the time. We had an arrangement with the Middle East and a relationship there. Then that relationship fell apart. And then the dollar became backed by US treasuries. But then after 2008, China stopped buying those because politicians and the central bank prioritized Wall Street over their foreign trading partners. And then the dollar became backed by de facto the US stock market. And that's kind of where we've been today. And what's unraveling now is that China operates in a $1 trillion trade surplus right now against the US deficits. And they need something to do with the dollars that they're getting. They can't reinvest them locally in their economy because that would strengthen their currency and weaken their export business. So they have to put the dollars somewhere. They don't want to put them in treasuries because those are real rates negative. Those are losing purchasing power. And so they've been dumping them into Facebook stock, into Amazon stock, into Nvidia stock. And that's where you get these companies that are trading at 50 times earnings, this irrational economic behavior, because all of the global trade surplus is being dumped into the US stock market. And now the United States and Donald Trump are saying, get your money out of our stock market. It's creating the most massive wealth gap in America. For those that don't have a college education, they don't benefit from this perpetual like market stocks go up phenomena that exists now in the US. And so you have an increasingly poor population in the middle of America. Those that live on the coast and have access to stocks are now getting ungodly rich without doing anything. And it's eroding the very like culture and of America. We have no manufacturing base. We have no middle class. And these American first trade policies that he's coming out with are saying, get your money out. Yeah, I don't think that's happening anytime soon. And to be clear, as an American, this is a bipartisan effort. Like the notion that this is a Republican thing or a Trump thing is garbage. It's just different rhetoric and different gobbledygook that's trying to achieve the same thing, which is, I mean, even the reliance on China as a national security threat at this point, at least you can make the claim. Over 78%, I think, is the number of the materials needed to produce weapons. We need China to play ball with us. So we've outsourced the ability to produce anything to such a degree that there has to be a Chi-America divorce, whatever that means to you. And that's bipartisan in the United States.
Jack Mallers delivers another sharp take on monetary theory, macroeconomics, and Bitcoin strategy. As the legacy financial system strains under its own contradictions, he urges a long-term perspective, moving away from over-leveraged, inflated markets and toward assets that are truly scarce and sovereign. His conviction in Bitcoin isn't just about the tech. It's about bringing integrity back to global capital. Want more? Click on this next video. Your future self might thank you.